Hi, everyone, and welcome to this episode of Money Moves. In this episode, I kind of want to build on what I talked about last time in terms of potential inflation risks as well as the bond yields. So I'll touch on that first. And then, of course, we have to talk about the stimulus checks that were finally passed. Then I will go over each of my investing accounts, starting with Worthy Bonds, Lending Club, GroundFloor, Fundrise, my retirement account, M1 Finance. Then I will finish up my investing portfolio with my options accounts with Robinhood and Tastyworks. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning the newly redesigned BMW M3, or if you're just getting started on your financial journey, definitely like and subscribe. This is the previous model, the 2020 version. They went from this gross design to this gorgeous luxury sports sedan starting at $70,000. Just kidding, this thing is absolutely disgusting. They later bragged that 1 in 5 people like this new grille, so 20% of you out there like it. Anyway, like and subscribe, and welcome to the Portfolio Bulletin. Let's get started. So let's get into these articles. This is going to be a little bit shorter episode, as I will be taking a short break since this upcoming week is spring break week and some states are finally opening. So it's definitely time to take a vacation if you have the means, but of course do it in the most financially responsible way that you possibly can. So they say there will be no peace for the markets until the 10-year Treasury yield hits 2%. And I would probably argue that it'll be a little bit higher than this, maybe even 2.5%. Because there's certainly the threat of inflation as the economy starts to reopen, and we have put a huge amount of liquidity into the economy. They say there was some nervousness in the markets as the 10-year bond hit the 1.6% yield mark and rallied above that a little bit up to 1.629%. And if you've been watching the growth stocks, primarily in the NASDAQ, you can see there was quite a bit of a sell-off, with some stocks dropping 30 to 40% from top to bottom. You could argue that part of this was because people are moving back into some recovery plays and value plays because the economy is reopening. But this is layered on top of the fact that these growth companies are not going to be able to get cheap money indefinitely. And since these companies tend to lose money, this makes it more expensive and more difficult for them to grow into the future. Also, for you currency traders out there, they mentioned they expect the dollar to continue to rise as yields rise, and the USD is expected to trend higher. Looking at the QQQs, you can see we had this pretty long-term trend all the way from the lows of March up to the previous highs on February 16th. Basically 1 year from the previous highs on February 19th. We had some small retraces here in September and October, and then we trended higher. And then I have this short-term trend that we were previously holding, which was pretty tight. It makes sense that it would break out of this one way or the other. And due to the yields as well as the potential reopening, we broke down here. And you can see the weighted moving average, the 30 weight, is now fully above the 9 EMA on the 4-hour chart. And you can see the same thing here on the daily chart. We've officially crossed over back here on February 23rd. We got a retest here and then a full rejection. And then we did have a small recovery right back to that 9 EMA. We had the full rejection off of that point and a slight recovery, but I'm expecting another dip here at least to the previous lows, if not a little bit lower. We're only going to price action from basically the start of the year. So this is not a huge correction, but it's definitely worth thinking about if you're buying these value stocks or if you're trading options in this market. Next, we have the stimulus. We're finally going to get those $1,400 checks that we were promised by Joe Biden, which could potentially fuel more inflation. Definitely take a look at this bill if you are a reseller or you sell things online. They slipped some tax code into the stimulus bill, as they tend to do with any bill that's very large like this. They have this big overarching theme, like giving everybody $1,400. Then they kind of undercut you at the knees when they slip all these different tax codes in there. And one of the things that they did in this case was lowering the tax reportable threshold for resellers and online merchants. Otherwise, looking at the tax bill, you should start seeing your checks hitting your bank account next week if you do have direct deposit. If you don't have direct deposit, obviously it will take longer, as they're going to have to mail physical checks, or they did mention the fact that they might do prepaid Visa cards, which would be pretty annoying, and it makes it far more difficult to use your money. But anyway, you should see $1,400 per person if you make $7,500 or less. And then they tapered it significantly more in this case than they did last time. if you make any more than $160,000 for a couple or $80,000 for an individual, you will see no money. So the amount of money that you get tapers pretty dramatically from $75,000 to $80,000. They didn't give any specifics on that, but if you did make more than that, then you shouldn't expect to see any stimulus. You could argue that this is what's propping up the NASDAQ right now, the fact that there is an injection of cash coming just to stem this little correction. But personally, I don't think this is enough to stop the fear coming from the bond market, and I do think we're going to get a little bit of a rejection like I mentioned previously. Moving on to my investments with worthy bonds. I continue to withdraw money out of here. I did bring it down to the $8,000 mark in the primary worthy capital account, and I continue to withdraw the interest. You can see I only have $1 of interest in here right now. And then worthy capital 2 and worthy community I've left alone. And normally this is the part where I say use the link in the description to get you one free bond when you fund your account. But it seems like they've completely sold out of their bonds right now, and I don't think you can get any. I know they're working on a worthy community too, but these sections are sold in $50 million sections. So that's 10 million bonds. And once those are sold out, they have to open a new section, which is why you see 3 so far here. And as I mentioned, they are completely sold out currently. It's really unfortunate because this is a great starter investment, and it's good for keeping some liquidity on the side, especially with how little money you get from high yield savings accounts right now. Talking about savings accounts, Lending Club finally announced their founding members savings account where you will receive 0.75 APY up to your first $20,000. 0.75 is definitely not going to keep me around when it comes to Lending Club, and I will continue to withdraw this money. I continue to see good returns, thankfully, as I continue to draw down this account. So I don't plan to open this account, and I will withdraw all of this money until it reaches 0 and invest it in other things. I forgot to mention it in the intro, but my current savings account is Yotta Bank, and I continue to get very good returns with them, far above 0.75%. Looking at our Yotta Group here, and if you don't know what Yotta Group is, definitely check out my previous Yotta videos. But if you are a member of Yotta Bank, make sure you join our group. We are currently up to 3 members, and I would really like to build this group up as much as we can. We got some pretty good returns last week, and it's cool that we all get to share them. Looking at past results, you can see I got 51 cents last week. But so far for March, I've received a 3.4% APY, which is obviously far above the 0.75 that Lending Club is offering now. And even in February, where I didn't have as good of a month, it was still at 1%. So definitely check this out if this appeals to you. And I've received over $16 in total money for this account in just a few months. If you're not a Yotta member, there is a link in the description that will get you free tickets when you fund your account. Moving on to GroundFloor, I'm up to 85 notes at $2,700 with an expected rate of return of 9.6% and almost $200 in returns based on this money. This account in terms of size is getting pretty much to where I want it to be. I still own a large amount of bonds, and I'm going to start tapering the amount of money that I put into this account and only investing in the highest yield notes. Anything below 7% I'm not interested in, as I can make more money other places. So anything above that, closer to that 10 to 12%, I will continue to invest in, as those are pretty high yield notes. And I've noticed some of those notes are a little bit shorter in duration. And looking at some of those notes here, you can see some of the notes I've chosen. Going forward, I probably wouldn't choose this one again. All of these 10% notes I would, and you can see this 10% note here at 3.5 months or so. I do like shorter term notes with high yields, and I will continue to invest in those. And then we have another 11% one here at 4.7%. There's quite a few 10% notes in this grouping. So based on this, I will continue to invest in some of these, but these 7% notes I'm not that interested in. 10% is okay, and then 11% of course. But as I mentioned, my bond holdings are still pretty high, and I'll talk about that more at the end of the video. Looking at Fundrise, you can see I'm going to break this $30,000 mark once my mid-month deposit goes in, which is pretty cool. Looking at my goals here, you can see I'm trying to get it up to $500,000 by 2040. They say I have to deposit $575 per month to get that done, but it still shows my mid-month here at $501,000 by that time frame. I thought they adjusted this a little bit, but they haven't. So they're still telling me to invest more money, of course, but I'm not going to change. I'm going to continue to invest the amount that I want to invest because I do have other investments that I'm putting other money towards. Looking at tax packages, it looks like K1s are finally out, so check those out if you are going to receive one this year. And they still haven't announced anything for the IPO. If you want more information on this, check out my last Fundrise video. But I'm still waiting for a date for when they are going to open this, as it makes it a little bit more difficult to plan future investments when all they said for this is it will come up in the next few weeks. Otherwise, I continue to get projects paid back, and I continue to acquire new projects in my portfolio, 4 new homes in the Dallas, Texas area, and they exited some commercial real estate in Los Angeles with the projects fully paid back. You can see they got 8.5% here and 9.2% in this other fixed income. When they say fixed income, that means debt investments, and this is dividend income when it goes into this fixed income here. Around this time next month, I will see how much appreciation I get, as they do this every quarter, and that's really where most of my returns come from when it comes to Fundrise. Moving on to my M1 accounts, you can see the past month has been pretty choppy. We're still at all-time highs. You can see my total account value here, up just over $400 in the last month, and around $20 of that was dividend income. Looking at the funds here, tech is still down overall. Finance has recovered very well. Real estate, another one that is seeing some benefits from the potential inflation. Industrials are up, and then consumer and utilities are down. We saw a slight recovery here in telecom, which is good, since that was the worst performing overall fund. Otherwise, everything else is doing well. But the main thing to talk about here is obviously the rotation out of tech, and I'm certainly not contributing more to tech right now. Moving on to my higher yield savings account, you can see over the past month, we're basically flat, up just 0.5% here. I mean, 0.5% in a month is still great compared to savings accounts across the market. And that's really why I made this, right? So I wanted to outperform savings accounts with generally some stability, but make more returns than putting money in there. And this account is designed to provide the last bit of liquidity in case I get into an emergency situation, where if I lose my job or anything like that, I still have quite a bit of money to survive a couple of months before I find a new job. Looking at the funds here, you can see VIG did recover a little bit. Government securities are down, which makes sense as the yields continue to rise. Real estate went back up, and all of these bond funds are starting to struggle. The value of bonds is inversely proportional to the yields, so as the yields continue to go up, obviously these bond funds are going to go down. As I mentioned, I think the yield will go to around 2, maybe 2.5%, so I don't expect these to go down too much more. And I'm currently not contributing to any of those, or really this account in general. This account is definitely high enough to cover my expenses for a few months, and I want to put any new money other places. You can see the worst performer here is long-term corporate bonds, down over 6%. But again, on $700, this is only a loss of $50, and these pay out some pretty good dividends, so I'm not super concerned, as I need these to balance out some of the volatility in this international stock fund or any of these other dividend growth ETFs. Overall, this account is doing exactly what I want it to do, being relatively stable but generating some gains. Moving on to my options portfolio, you can see I'm down almost 1% in the past month, and that's because I was pretty heavily weighted towards tech in these accounts. You can see I'm almost completely out of the market. I still have my GE roll because this is part of a series where I plan to roll this for most of the year. And I have recorded another video on this, and I will be releasing it next week, so definitely like and subscribe so you don't miss out on that content. Otherwise, check out my previous GE videos to see the journey so far this year. Currently still holding AMC as well as Tattooed Chef, and I also have a couple of cryptocurrencies in here. At some point in the future, I will move these over to a wallet where they start generating at least a little bit of interest, as I'm not generating maximum returns by holding onto this. You can see all of it is up right now, but I could benefit a little bit more if I did generate some interest on top of that, and kind of like a dividend for your crypto, and continue to reinvest that money. If you want to see a full options portfolio overview, definitely check out my video from last weekend, and it is linked above. Moving on to my Tastyworks account, you can see again, similar trend here. I'm almost completely out of the markets. I still have a SPY position, a QQQ, as well as the Russell. I'm a little bit short the Qs here, which makes sense based on the charting that I showed you before. But this still is an iron condor. As I mentioned, if you want to learn more about my options positions, definitely check out the previous video. But currently I'm waiting to see how tech performs in the next week, and I may re-enter some positions. Also, I might get into some value plays as just to play off of that rotation that we're seeing in the markets. Looking at my weekly tracker here, you can see stocks were basically flat over the last month, sitting at down just $100 from a month ago. Similarly, we have trading here also right about the same from a month ago. Bonds are probably going to stay flat here for a while. Real estate is going to continue to uptrend, and Lending Club is starting to accelerate here a little bit to the downside, which is good because I can take that money and move it other places. And cash has been perfectly flat over the last while, which is good. That means I'm using every dollar to invest or pay bills or pay down some debts. And yes, I did say debts. I do have a little bit of cheap debt, which is not a bad thing as long as it is cheap. Overall here, bonds actually did go up a little bit. Part of this is because of GroundFloor, but also because of the rotation in my retirement account. And based on this number here, just over $30,000 out of my 230 listed here, that's well over 10% of this portfolio, whereas stock is only at 83,000 here. I do kind of include trading in this a little bit, but not directly. So you can see this bond holding is a pretty large percentage of my portfolio. And as I mentioned, and then Lending Club is another form of bonds. So together that makes up a pretty large amount of my money. And I want to start to reduce this at least a little bit and move a little bit more into stocks. Of course, we're at all-time highs, so it's not a great time to do that, but it's definitely a move that I'm going to start making. In the meantime, I will continue to increase my REIT holdings as I continue to reinvest there. Overall, up a little bit from last week, but if you remember, I was down last week, so I'm up from the lows, but I'm not quite as high as I was a month ago, which makes sense because the markets did dip a little bit from there. If you like any of these platforms, definitely use the links in the description to open those accounts. It gets both of us some free stuff and it supports my channel, and I appreciate it. Even with Worthy Bonds, if you want to get set up for their new account, I'm sure they will open it relatively soon and you should be able to buy bonds once it opens. Let me know down in the comment section what you think of the inflationary risks and what you're going to do with your stimulus money. Do you need it to pay bills, or are you just going to invest all of that money? Definitely like and subscribe if you got any value out of this video. I do this video around the 1st and 15th of every month, so if you want to follow along with my journey, definitely hit the bell. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. I wanted to pick a single video from this channel, but I really couldn't. I've been pretty addicted to this channel here recently. It's called You Suck at Cooking, and he does a lot of different types of food, but he makes all of them pretty funny and interesting. He's very sarcastic, and his videos tend to be either completely unrelated to the food while still making the food and kind of teaching you how to make them, but mainly they're just very entertaining. I really appreciate his sense of humor, so definitely check out this channel if you haven't seen it before. Obviously, it has 2.5 million subscribers already, so it's pretty popular, but I hadn't discovered it until very recently. I've probably watched around half of his 120 videos already, and it's pretty hilarious. So definitely comment down below if you like this channel or if you've never seen it before. Definitely like and subscribe before you go, and have a great day.